And then go to the campus gym. That's still free, right? They didn't take that away. Okay. Gym memberships are like really expensive out there now. I pay $150 for the ride a month, and that's it's the family plan too. But still, I think it's $95 for not the family plan. Yeah, so take advantage of that as much as you possibly can. And then don't buy music. Use the Spotify, Apple Music. I think somebody told me Pandora is also discounted for students, so look into that maybe. But you never know. Okay, credit cards and credit reports. So, how many of you have credit cards? Okay. How many of you are good with the credit cards? You think you're good with pay them off? How many of you have a ton of balance going on right now? It's just out of control. So, yeah, okay. You don't have to answer, you know. So credit cards are kind of, they can be very disruptive or they can help you out. So how you use them is going to be the most important part of it. And also what kind of credit card it is will also be a big factor as well. So one thing you want to do is you want to set a credit limit, and I don't mean the credit limit they give you. So if they give you a $10,000 credit limit, really in your mind you need to think that you only have $3,000 that to use. So the way credit bureaus look at credit cards is once a month they peek into your business and they say, okay, they have this amount of balance versus this amount of credit limit. If that balance is 30% of the limit or higher, your credit score goes down automatically, and it goes down a pretty good amount too. So you want to stay at the 30% mark for your credit cards. And then you want to try to pay off as much of the balance per month as possible. Theoretically, the perfect credit card is to have no balance on there, but you still want to use the card too. So once a month, buy something. That should be.
Do you mind clarifying that point? Thank you.
Yeah. So really what you want to do is not keep a balance on there. You want to just buy one thing a month and then pay it off. That's really how credit cards should be. However, you can't always do that. Obviously, you're going to need to use it for other things. That'll come up. But try to keep the balance as low as possible. And then also pay on time. If it's 30 days late, then it goes on your credit report, and it stays on there for a long time, 2 years. So it's really hard to come from that. Even after you pay it off and get it correct, it's still going to be on there that it was late for 30 days. All right. And then credit score is an estimated credit risk. So that's how much, the higher the score, the higher probability of you paying back something. That's the way a credit score works. Lower the score, then odds are you're not going to pay it back, and lenders are not going to give you any loans or credit cards or whatever. So this influences your ability to obtain loans and credit cards. So yeah, car loans, any kind of loan, if your score is low and you have a bad history, you're either going to get approved for a really bad rate or you're just not going to get approved. So I'd say now is the time, when you turn 18 really, is when you want to start building your credit up too. Part of the credit score too is how long you've had credit for. So if you just start credit when you're 25, then it's going to hurt you when you actually need things. So I know one person who was a millionaire and never took out a loan, never even started getting credit cards because they had money to pay in cash the whole time. And then all of a sudden all that changed, and he was 58 years old and came in for a loan and he had 0 credit score and he did not get approved. So you want to start building credit early on, even if you have money to pay things off. Still try to build credit with little credit cards or something like that too. Credit score ranges from 0 to 8, really 856. I've seen 851 once. It's really hard to get a perfect score. The planets have to align, and you pretty much have to pay every bill on time ever. That's for sure. But people will go crazy trying to get the perfect score, and it's just not going to happen some days. If you can get above really 730, then you're in pretty good shape. 750, to be honest, that should be where you're aiming for, and be happy with that. That's perfectly fine. And then there's 3 credit bureaus. You have Experian, TransUnion, and Equifax. Those are the 3 ones, and they're pretty close to the same rating. You'll be usually within 5 to 10 points of each other. And then credit reporting that's just a history of all your loans and credit cards and what you've done with it. So for better or worse, that's what's going to show up on the credit reports. Missed payments, late payments, car repossessions, bankruptcies, that'll all be on there for a long time. And so any negative things will show up on there as well. And then keep your old credit cards. So let's say you keep getting approved for credit cards. It doesn't necessarily hurt you to close the old ones out. Sometimes that gives you a bigger credit limit versus how much money you actually have on there as a balance too. That helps in that 30% credit. It's called the credit utilization ratio, the 30%, keeping that on there too. So don't be quick to close out credit cards too. That's really what I mean. And then just rules of financial success. Pay on time is the biggest rule there is. So that is, that's the key to the whole thing. So know when your bills are. This day and age, it's very easy to just set everything on auto pay and never have to worry about it again. It sounds great, but sometimes there are glitches in the system. There could be things down there that people haven't paid for 3 months and they're trying to get a hold of you. Maybe you forgot to update your phone number with them or your address. And I've seen really bad things happen just because people just set it on auto pay and forget about it for a long time. So keep monitoring it as best you can. Auto pay is a great thing, but just keep an eye on it. Make sure it went through still every month. There's going to be a lot of places out there that are just ruthless when it comes to that. If you're late, they will not work with you. They will not take it off your credit. They're not going to give you the money back or late fees back. They will just take their money and go. Or you'll just wake up one day and your phone bill just won't work. Your phone won't work, your internet, whatever. So that's not what you want. And then avoid really bad debt. So don't rack up the credit cards. Maxing out the credit cards is one of the worst things you could do too. That's going to lower your score big time. And then it's really hard to get away from that. Credit cards are literally designed so you don't pay them off. The monthly payment will take you forever to pay off. So the minimum monthly payment, I mean. If you have like a $12,000 balance, I think the minimum payment would be $130 a month. If you do the math plus the interest on there, it's going to take you the rest of your life. So try to avoid racking up that. And then, boats and other recreational vehicles, things like that, that's great too, but if you can afford it or anything, just try not to splurge on things you don't need. Don't get loans you don't need. Vacation loans, just be careful if you're going on vacation, you need a loan or something like that too. It's hard to pay off some of those things too, especially go on vacation and spend more money than you think you need. So, unneeded personal loans. A lot of people come in that I have that they get one personal loan and then that solves their problem for a couple months and they come back for another one to pay off the old one and then add more money on. And then it just keeps ramping itself up. All right. And the best way to manage debt is try to avoid it as best as possible. It's not always going to work, so don't be discouraged by that. And then, just kind of a repetitiveness, but just look for ways to save money as best you can. Just keep on your budget, cut unneeded subscriptions, check expiration dates on groceries too. It's a good idea. Don't overspend on groceries and then have to throw all of it out. That is one of the biggest wastes of money we do. So, and then cutting back on expense gives you the power to control your money. And then just a little bit about us. So we are, at the Advantage Federal Credit Union, like I said, but locally owned and operated. Does anybody know the difference between a credit union and a bank? Anybody? Well, most people don't.
With a credit union, the profit profits are shared between members instead
Correct.
of going
Yeah.
to the central entity of the church.
That's right, yeah. So if all of you, if we started our own credit union right now, all of us here, we would all put our money into our savings, but out of that money, we can use that money to borrow, or for other people to borrow loans. So that money goes on the books, and we can give out loans on that. That's how it works, really. And we can charge interest on those loans to pay ourselves back, and also give you a good rate too on your savings too. And that's really the name of the game on profit, is how much money we're giving out on savings versus how much we're giving out on loans, and how much we're making on loan interest. So that's, in a nutshell, that is exactly what a credit union is. Banks are a little different. They're more out for profit. They'll charge you fees. They have more widespread power, I would say, but we can pretty much do 95% of the things a bank can as well. So, and for much cheaper. Yeah. So if anybody have a question about the bank versus credit union, let's see. And then what things we offer you, student checking accounts too. I do have a flyer on here as well. Did you want to swap out? It might be. We're almost ramping up. Okay. We're almost down to the end of the presentation anyway. So yeah, with student checking accounts, we have a really good product here for students. It actually pays you money just for using the debit card here. If you use it 15 times a month, you get $5 for free, and then if you use it 30 times in a month, then you get $10 every month. So we offer things like that, debit cards. So we actually print them on site as well. We're the only place that does that. So if you ever lose it, you can come back and print it. We have a really nice mobile app. It makes it easy for you too to check on things. And then, like I was saying, we offer lower interest rates than banks. We can usually beat out car loan rates. Our credit cards our rates are much better than like store cards. And then higher investment rates too for CDs.